and happy Wednesday, traders. I am Rachel Deschelle, Senior Manager of Trading Services and your host for this webcast on trading price patterns. Now, in this class, we do make the assumption that you are already familiar with the basics of technical analysis. So if you are not, you are more than welcome to stay around, but you may want to get started with the Getting Started with Technical Analysis webcast series first. Now, we do have Brett Crowther in the chat. He will be helping me answer all of your questions, comments, requests during the session today. So please feel free to chat those in. And please follow us both on X. He is Brett Crowther CS. I am Rachel Dash CS. We post a lot of charts and a lot of updates. So a lot of the things that you'll see today, you probably have already seen on my X, and we have a few other ones as well. But also, please feel free to like this video and subscribe to our Trader Talks Schwab coaching channel on YouTube. Now, today I'm excited to look at chart patterns across multiple time frames and talk about how our approach to trading these patterns changes a little bit with the current market environment that we're in. So I am excited to get started today, but let's hit those important disclosures first here. So keep in mind that options carry a high level of risk and are not suitable for all investors. The information we're going to cover is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are going to go through the paper money application. Keep in mind that there are some differences between paper and live, so keep that in mind as we go today. Now, another important announcement, we do have some upcoming workshops and market drives. Get excited because these are super fun, those of you that have been there. So we have one this weekend on advanced options in Dallas. So if you haven't registered for it yet, do not worry, you can still register for it. That one's going to be a lot of fun. We have Boston, which is our technical analysis and options strategies workshop. I will be there on that one with the team. And then we have our Chicago market drive mid-May on May 16th. So a lot of exciting things happening and obviously a lot to talk about. So getting into our agenda, we are going to start the way we always start this class with a market overview. We're going to review past trades, discuss price patterns, place new trades, and walk through our trade management. So let's dive into the fun here by first just doing a little overview of some of the markets from what we're seeing today. So obviously, big headline driven rally here where we had a massive gap, a massive push above that 200-day moving average, and now we are flirting with the 50-day moving average here in blue. So this is going to be our biggest area of resistance here. And let's just see if there's any other areas of resistance that kind of wind up if we look towards our Fibonacci retracements. Well, it looks like price found a little bit of a confluence here where it is finding support right at its 61.8% retracement of that entire move back up and the 50-day. So obviously crucial level that will be really tested here. If price can continue to move to the upside, and if this truly is the low, you may be looking at recent highs right around 69.50, right around there or so. And then to the downside, this entire gap becomes that area of support. And of course, that 200-day moving average comes at that confluence of support right where it meets that 66.60, the 50% retracement of that move down. So keep in mind, those are a couple levels traders will be watching as the market digests a lot of the new information that it's receiving play by play. A couple other things that I thought were notable today, because you're seeing kind of this ricochet and this decision point across many different parts of the market. You're seeing a gap above the 50-day in small caps here. So that is notable. Again, that entire gap before becomes that new ledge of support. So keep that in mind. Now, if that gap is closed within a couple days on these indexes, those become exhaustion gaps, which mark the end of that short-term trend. So keep that in mind. A couple other things that are noticeable on the dollar. We've talked about this one quite a bit. The dollar has been in this range between 100 and 96, and this rise in the dollar has put a lot of pressure on risk assets as we've had this rally up to that $100 resistance. Well, look at where we're finding support today. So kind of funny that the same time that the major averages are finding resistance at the 50-day, you have the dollar finding support at the 50-day. Meanwhile, you also have a golden cross persisting there where that 50-day moving average, that shorter term moving average, is crossing above that 200-day, that longer term moving average there as well. So a few different notable things today. Obviously, a lot of intermarket evidence. A lot will be dependent on prices, moves in the dollar, prices of crude oil that have put a little pressure on equity markets. So as traders, we're keeping all that evidence in mind today. So let's take a look at some of our past trades. One of our trades that we are currently in is FRO. So Frontline. This was one where we saw this inverse head and shoulders pattern. I'm going to take off these moving averages just to give us a clear picture of the price action. So we saw this inverse head and shoulders pattern. I know the trend line's drawn a little far away from the daily bars, but we saw this pattern actually on the 90-day 4-hour chart. So this probably gives you a little bit of better look of what we were looking at here. So we took a trade when we saw that 2% move beyond that trend line or neckline resistance. And then we put our stop here at the right shoulder here at that level of support. And then we have our profit at our measured move, the entire depth of that inverse head and shoulders. Now we talked about how this one was a little bit more of a bearish tilt, or I guess not necessarily bearish tilt because it is a bullish reversal pattern, but it's a little bit less bullish when we see the slanted down trend line here. And the reason why is because we know that the change of a trend happens when you are starting to make higher highs and higher lows. And we noticed here that we were not necessarily making a higher high until price had this little run up here. But again, just kind of prices really finding a level of support back there at the scene of the crime, that trend line support there. So that is our one trade that we're in. We haven't gotten filled on either of those other trades that we did last week, PFE or APD. So haven't gotten into any of those. So let's take a look at some new price patterns. Okay, so a couple of the ones that we actually looked at last week that were on our pattern watch list, because we know at the end of this webcast we always rip through our pattern watch list for possible patterns that we may trade in the coming weeks. So one of the ones we looked at was CoreWeave, and we're going to take a look at this one yet again today. And in CoreWeave, we can see that over this year of time, CoreWeave has been making lower highs, lower lows. So it has been in this prolonged downtrend. There's no question about that. And even if we zoom in a little bit closer to where we see these trend lines, this trend line resistance, this trend line support, you're seeing the same thing in the short term. So you're seeing lower highs, lower lows. So that short-term trend has been lower, okay? Now, we mentioned that it is looking like it is forming a falling wedge type pattern. And essentially what this is you're seeing higher highs and lower highs and lower lows being formed at different rates or different speeds. So essentially what that creates is that gives us a trend line resistance to the upside. We need 2 or 3 touches on either side of the pattern. And you can see the downside velocity is quicker with the highs than it really is with the lows that are being made. So you can see that momentum to the downside on the lows isn't as strong as it is with those highs. So typically falling wedge patterns typically tend to be a possible reversal pattern a lot of the times. And so that's exactly what we're seeing today. Actually, we did have a test of that yesterday, and then we had a gap through that trend line resistance here. And with this one, last week, we marked this with a 3.5% move actually outside of this possible pattern. So this marks a 3.5% move, which is more than enough of what we look for in this class for confirmation to be able to take that trade. We know in this class, a lot of the times we wait for a 2% move outside of that range. So that's something that we're going to be keeping our eye on with this trade specifically. So we're going to talk a little bit how we can possibly set this up. Now, we know with the current market environment that we're in, when we have a little bit of mixed evidence. So we've seen that the short-term trend has been down. We've seen some breaks in the longer-term trend. We've seen weak breadth. We may be starting to see a little bit of turnaround in that as well. We know that there's a couple things we want to do as traders. We don't want to be as aggressive, especially we don't want to be aggressive on buying on pullbacks. We don't want to be aggressive with breakout chasing. We definitely want to not necessarily take full position sizing like we normally would. So we may take a smaller position size in that case. We may take profits a lot quicker, and we may sell into areas of resistance. So those are all things that we do as traders when we have a mixed regime type of environment here from a risk perspective. So we're going to keep that in mind as we make our rules today. And I guess the last one I left out of there is we're also going to wait for a little bit more confirmation, because we know in environments like what we are in, or what we have been in, is that it is marked by a lot of failed breakouts, false breakouts, early breakouts. So we also want to be cautious of that as well. So we either want to, as traders, look for a little bit of confirmation, depending on what that looks like. So we may wait for a couple closes beyond those levels of resistance or support, or we may actually widen our rule for that 2% move to 3% in that case. So that is what we're going to do with this class today, is just make a couple tweaks like that to, of course, number one, to focus on price action, but to make sure we're remaining cautiously optimistic, since we know given the current market environment as well. And I am seeing Chris put something in the chat about the McClellan oscillator popping up today. Yes, that one is a neat one as well. You guys can find that in Thinkorswim. It's basically going to take that difference of a 19-day exponential moving average and a 39-day exponential moving average of advancers versus decliners. So that's actually kind of a neat one that marks a lot of, could mark a lot of bottoms in the S&P 500 too. So great call out there, Chris. I love to hear that one. So what we're going to do, we're going to work with this breakout that we've seen, since price still is holding above that 3.5% break that we kind of made here. So that is going to be our entry today, is taking that current trade, and we're going to work just with a long stock trade. Now, if you wanted to essentially incorporate options into this for a bullish reversal, you could add the implied volatility to kind of see what type of volatility environment that we are in. It's pretty relatively low for CoreWeave from what it's seen over the past year. So a lot of options traders would say this type of volatility environment would favor buying options rather than selling options. So one way you could play out this trade is by a possible bull call spread, whatever you would like to kind of do there. But we are going to work with the common stock today on this one. So let's talk about how we can measure this one. So we talked about our entry already being valid from seeing that percentage move today. But if we want to look to see where a measured move in this possible name could take us to the upside, we're going to take the widest point of the pattern, just like we would do for any other types of patterns. We're always going to measure the widest part of the pattern, and that is about $40 here. So you guys can see I took the high to the low, and it measures $40 here. And if I just put that right here from the breakout point, it's going to take us right to this earnings gap here, my friends. Look at that. Okay. So right to the earnings gap. It is always funny. You hear me tell you this a million times. It's always gonna make me chuckle when you have a measured move that aligns up with a valid area of horizontal support or resistance. So that's really going to be the level that traders may be looking at here to trade that. Now, a couple other short-term levels that you may want to be aware of where we may want to take profits a little bit sooner could be a couple areas. One would be right above 100. Another one could be right at this recent high above 114. So keep that in mind. Now, the other thing that we're going to look at is to the downside, because when we are in the current market environment that we are in, we are going to keep a tight stop on as well. So to minimize any losses to the downside here, or really find our way out of a trade if we see a false or early breakout. So what we are essentially going to look at here is we're going to look at this low of this candle here that we saw just from the previous day. So we're going to look at the low of this candle, and I'm going to zoom in a little bit more so you guys can see this. We're going to take the low of this candle, and that's going to give us an area where we could place our stop. Now, if we look at our risk to reward, I'm going to actually draw this on the screen here so you guys can see. Okay, so this entire area right here from our entry to our stop, this is our entire area of risk, okay? So this is about $8 here. $8. Okay, and where is our reward possibly to the upside? Well, it depends on where we're going to possibly take our profits. Now, we could do this right at 103. So this could give us, whoops, I don't know what type of sign that was. But this could give us a possibility of about $14 in profit, okay? And this is what we would call our reward. So this entire area is our reward. Now, a lot of traders possibly look for a 2-to-1 risk to reward or a 3-to-1 risk to reward. So if you're a trader that's looking to be a little bit more aggressive, you could look up near the 114. That would obviously give you a larger area of reward here compared to the risk that you are taking on. In this type of environment today, we're going to be a little bit more cautious, and we may take some profit right around 103. Okay. Now there are things that you could do as a trader, and you could say, hey, if I want to take a $10,000 position in this, which is what we may be looking to do today, maybe taking a $10,000 position. We may close out half of the position at 103, so this first level of resistance, and we may move up our stop as it goes if the price of the stock does move up, and we may take the rest of our profit at the highest level here at those recent pivot highs. So a couple different ways that you could look at this as a trader. Now we know that this isn't an entire measured move from this wedge, but we also know that patterns are not guarantees, and we also want to take our profits where we can. So we're going to structure this trade exactly how we've kind of set it up today. So I do see a survey that was placed in the chat. So if you guys could take just probably 10 seconds or so filling that out. It's just 2 simple questions. If you guys want to take a little bit more time and put some critical feedback in there, I more than welcome it, actually. So I look at all of your guys' comments, questions, and requests, and that is what helps me build that feedback into future sessions. So if there are things that you want to see more of, less of, definitely put that in the comments there and take that time to fill that out. So I would appreciate that. So let's take a look at crafting this trade here. So we're going to look at building this trade. We're going to click on the price of the stock, go to buy custom, and we are going to use our bracket here. Whoops. We're going to go to buy custom and use our $10,000 OCO bracket. Okay. Now, what we already talked about from things that we want to be aware of as a trader, we may want to take a little bit of a smaller position size. So we're going to bump this down. Even though it's already less than 5% of our account, we're just going to go a little bit smaller today, and we're going to look at $8,000. So we're going to take an $8,000 position size here, which still stays within our parameters. We know we're going to place a current entry price at the current price. And then what we're also going to do, actually, I'm going to show you guys something different a little bit. So we're going to take a first triggers to OCO in this case. So we're going to talk about those two areas of taking profit. We're going to do a first triggers to OCO. So essentially what we're going to do is we're just going to right click on this OCO and we're going to create a duplicate order. Okay. And now you guys can see that we have, whoops, here, let me create another duplicate order. Whoops, hang on. Let me build this out real quick for you guys. We're going to do 10,000 OCO. I had this locked in, so that was why. We're going to change it to first triggers to OCO, and we're going to right click, create duplicate order, right click, create duplicate order. Okay, that was my mistake. So what we're going to do is we're going to lock that in, and we're going to change all of these to 50%. Because essentially what we're doing is we're saying that the first OCO, we're going to close out 50% of our position. And the second OCO, we're going to close out the other half of our position. Okay. So that's what we're doing with this one. A little bit different today. So this is a little bit of a new order for this class. Now, where's the first level that we're going to take profit? Well, we talked about 103.44 being that first level of resistance that we may run into there. So we're going to put this first profit taking order at 103.44 there. We're going to keep our stop to the downside with that low of that candle right around 80.13. So 80.13. Now, let's look at our other OCO to the upside. We have that other area of resistance at 114.45. So let's say we do reach this level of resistance. Well, that's going to close out half of our position, and it's going to leave the other half still in and working, and it's going to be dependent off of that profit target. And then we're still going to place our stop down at 80.13, and we can move our stop up as we go. So that is how we are going to build that order. I have someone in the chat saying, ooh, I like this type of order. Yes, it is a great way to set up automation for your process to take profit or losses at varied levels. So this is essentially what traders would call pyramiding out of a position. Some traders pyramid into the position where they add exposure. In this case, we're going to pyramid out of the position or essentially take profits, take layers off of our position as we reach some of these defined levels. So We're going to use that first triggers to OCO order today. We're going to hit confirm and send, and we are going to send this to our price patterns group here. So everything looks okay to me. Good till canceled. Okay. We have that in and working now. Now you can see all of our profit and stop levels on this one. Now let's take a look at another one that has popped up today is Firefly Aerospace. Now this is another one, this is actually an aerospace stock that just started trading last year. And if you guys want to put in the chat, throw in the chat what this one is kind of showing us on the chart as far as a type of pattern. I know something is popping out to me, it's pretty evident, which is looking like you guessed it, a double bottom pattern here. So possible double bottom. So what we're seeing here is we have one bottom with all-time lows here. They're at 16, and we have another low, a higher low, they're around 17 or so. So those lows are pretty close together, enough to call it a double bottom pattern. And then we had our neckline resistance really right here, right around 34 or so. And right now, if we just take a measured move of price, we can see that right now price is trading 8% above this level. So we definitely have quite a bit of a move. We have actually 3 closes now, well, about to be 3 closes above this level of resistance, which would give a lot of traders enough of confirmation, whether you're a percentage breakout trader, where you're looking for those percentage envelopes, or if you're looking for if you are a close-based trader. So that is again what we want to do in this type of market environment. We want to wait for that confirmation. We want to wait till that pattern is complete and has had a decisive break out of a level of resistance or support before taking that possible trade. Now, what you may be wondering is, well, now that we have the breakout, that gives us the signal to possibly trade this. Where do we want to place our profit target? Where do we want to place our stop loss orders given the market environment? And so what we're going to look to do is we're going to take the same thing that we always do is we're going to take a measured move of the entire depth of this pattern right to the lows. And that gives us about an $18 move here. So we're going to take that move, we're going to project it to the upside, and that is going to give us a level right around 53.26. Okay, now that's quite a bit far from where the current price is now, so it gives us a little bit of time to run. Keep in mind though, there is another level of resistance here right around 49 or so. You can see that was where a low was made. You can see a couple highs were made where price kind of ran into that level and then got rejected. So we may actually be wanting to take profit a little bit quicker in this one. So keep those factors in mind as you're kind of measuring out these price patterns. Sometimes price is going to run into a couple different levels of support or resistance in this case, where it could give us a little bit of profit taking potential here. So Barbara had a really good question in the chat. Does a second bottom higher than the first bottom designate a stronger pattern? And ding, 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 yes, you are correct, because a higher low is the first signal of a possible change in trend. So when we're done making lower lows, well, let's just say when the price is in a downtrend, the first thing we want price to do is to stop going down. And if price is stopping going down, that means it is making a higher low. And then we look for price to make higher highs to really give us that new change in trend. And essentially that is what we are seeing here with this one. We are seeing higher highs being made in FLY here. So that is giving us that signal of a possible bullish reversal for these patterns. So keep in mind, as we're identifying these patterns of the chart, we're really just using basic concepts of technical analysis of looking at levels of highs and lows. So what makes an uptrend? Higher highs and higher lows. What makes a sideways trend? Same level of highs, same level of lows. What makes a downtrend? Lower highs, lower lows. So those things are going to be what you're going to want to look for to see if we are seeing that possible change in trend, especially with these reversal type patterns, which is what we're looking at today in this one. So let's build this trade as well. We're just going to use a traditional first triggers OCO order. And the level that we may want to look at for our stop order may actually be the midpoint of this very large candle right here. So if we kind of zoom into this a little bit, we see a very large candle right here. And a lot of times the midpoint of one of these very large candles can act a little bit as a price magnet. And so we're going to use that as our level of our stop or exit to the downside. And again, that is because if this ends up being a false breakout or an early breakout, we want to make sure we have a stop in a few points underneath the level of our pattern to make sure that we do get stopped out and cut out our losses. Now, what we may very well see, which is something that we see quite a bit with price patterns actually, is if the trend is extended, if momentum is extended, you may see even a support retest here. So we may even see price come back down to this level of 34.33, and it may retest that level as well. Now, if we are already in this trade and price comes down and retests this level, and actually gives us maybe a hold, maybe a close above the high of the low day. So maybe gives us confirmation of that bounce. That may tell a trader that, hey, maybe now is a time to add even a little bit more to this position. So those are some things to just kind of consider as you're trading through these price patterns, as you're managing these trades, because again, like we said with the last one, we're going to start just a little bit smaller on this one, and we're going to start with by custom $10,000 OCO. We're going to change that to $8,000. We're still going to stay under that 5% limit there. We're going to place the order at the current price using a limit order. We're going to place our limit to the upside right at 49.11, and then our stop to the downside right around 29.92. Now, something I did not mention with this last order because we went through that one rather quickly, but I want you guys to keep in mind with stop orders, there are risks. So a stop order is going to trigger off that last traded price for a stock, and it's going to become a market order. So there is no guarantee that this order would be filled at or near the current price, or at or near the stop or the activation price, because what can a stock do in the extended hours? Well, it can move pretty aggressively, like we saw just last night or this morning. So if you do have, let's say, a big gap down overnight, and the stock opens much lower than your stop, you're obviously sending a market order right at the open. So keep in mind just a couple different risks with stop orders there that we're going to be aware of. But we're going to place this order here. We're going to hit confirm and send. We're going to send this to our price patterns group, and we're going to hit send there. Okay. Now let's see if we have any other questions. If you guys do have questions, please feel free to put those in the chat. Also, another thing that I wanted to do during this session today is I typically bring a list of price patterns to look at, But one of the things that I wanted to do today was to see if you guys had any lists of stocks that you guys wanted to look at, and we can chart those live here, because I think something that is pretty important is looking at a stock on multiple time frames. And so I want to get into talking about that a little bit as well, because if you look at a stock on multiple time frames, you're going to get a lot of information on the context of that particular price pattern or trend. So we're going to use, let's say, Broadcom as an example. So I'm going to wait for you guys to put some of those in the chat. Oh, we have a couple put in the chat already. Let's look at Microsoft. Okay, Microsoft. This is one that we can look at. And if you look at the current price action, let's just zoom into the very short-term price action. We're going to go really short-term here on the 20-day hourly. We can actually see that, well, what has price done? Price has actually made a couple different patterns here, and you guys are actually seeing this unfold live. So we actually saw that Microsoft really had this ascending triangle pattern where we had higher highs, or I guess the same level of highs being met, and we had a lower, or a higher low, I should say, where we had this breakout here to the upside, and now it looks like we are retesting that level of old resistance, new support. Some would call this a possible, maybe even a cup and handle pattern as well, where you have maybe even two handles here, but we definitely have the cup, that bullish shape, which shows us a little bit of repair taking place, where you have higher lows, and then you have now higher highs being met. So if price can hold here, that may give a trader a reason to maybe project this type of price action to the upside. Okay, so if we can get a hold here, or a close above the high of the low bar in this case, that may give short-term traders a tactical edge there as far as finding an entry at support. Now, if we look at this on a longer term, because we definitely want to see where this price pattern is possibly forming from a longer term perspective, well, we have yearly lows right here. We have this coming off of yearly lows. So the price of the stock is still making lower lows, lower highs. Nothing has changed there on the longer term. And if we look at a much longer time frame, we can actually see that with Microsoft, this pattern is actually forming at a very, very crucial long-term level of support. So traders may be asking, is this the first sign of possible repair? And I think a lot of traders would say, hey, if we can hold above these short-term levels, that may give us an area where it could say, hey, maybe this is a little bit of short-term repair. Maybe this is a turnaround, a possible turnaround here at these crucial levels of long-term support. Okay, let's see what else we had. Okay, Chris said Lunar. Let's take a look at Lunar as well. Okay. What are we looking at with Lunar? Let's zoom out a little bit with Lunar to put this into a little bit of context here. So with Lunar, we're seeing something on the longer term chart actually. So we're seeing actually a cup and handle take place on the longer term chart. So if you take these recent highs that we've had, you can clearly see that level of resistance right around 23 or so, where you see this cup. And then you have this handle taking shape right at those lows around 14 or so. And price seems to be finding that valid level of long-term resistance right here. So this is only going to be information that you're going to glean if you take a zoom out on the chart. And so as a technician, as a person that is, or a trader that is using charts to trade, A lot of traders would suggest taking that current short-term price action, zooming out to get a little bit more context here, because you can clearly see, yes, we are running into that level of resistance. If we piece it down a little bit, what are we seeing here? Well, if we piece it down to the 1 year, since we have seen higher lows being made in the price from these lows, higher lows, and we've clearly seen higher highs, something that a trader may point out is that we may see a little bit of a bull flag here. So that may look like a little bit of a bull flag with this one. So what you can do with a bull flag, since a bull flag takes place during a continuation, so a bull flag is just essentially a short-term consolidation within an ongoing uptrend. You have that steep ascent going into that consolidation, and you typically with bull flags have that breakout of that upper band of resistance. So if you take that entire flagpole of price leading up into that consolidation, that places our possible profit target for this one right around 28.50 or so. So if it holds that in the short term. Okay, so that's kind of what it's looking like there. Now we have a couple more minutes. Okay, I see a couple for Dell. Let's take a look at Dell and see what's going on with Dell on this one. Okay. There is way too many drawings on this chart. I'm going to remove this one for Dell. Okay, so for Dell, what are we seeing here in the price of Dell? We're seeing higher lows being made, and we're seeing higher highs being made. So this tells us that in the short term, we are in an uptrend. And if you take a even closer look here, you may find patterns within. So the first thing you're going to do again, look at different time frames, define the trend that you are seeing, and then you can take a closer look at the fluctuations in price that we are actually seeing here. So one of the things I've noticed, we had a little bit of a cup and handle pattern take shape here with the cup and then the handle. And we're also seeing, we saw that breakout of resistance here, but we're still kind of struggling with that price right now. So that's going to probably be the biggest thing on a trader's horizon, is just kind of taking a look to see if these highs are held, or if we may see a support retest back down to that old level of resistance, now new support. Okay. And now, since we're kind of getting close to the edge of time, I know a lot of you guys have asked just how we find some of these price patterns, how you can narrow down the list of stocks. Well, honestly, the easiest way, start with stocks that you're already familiar with. Maybe start with stocks in your watch list, stocks in your portfolio, and just look at these companies on various time frames, because more times than not, you will find some type of price pattern if you just piece down the time frame little by little. I know a lot of traders will narrow down their list by putting in basic filters in the scan tab for maybe a price, for maybe an index, for maybe an industry that they want to focus on, and putting other filters like a long-term trend signal, like the 200-day or the 50-day moving average, and also just kind of levels of liquidity as well, depending on whether you're trading the common or the options too. So just a couple different ways that you can narrow them down. But as you guys have seen, we took some live requests for charts today, and we found price patterns on every single one of them. So I would definitely suggest looking across multiple time frames, putting the current price action into the context of the long, the intermediate, and the short-term trend, and stick to your rules. So in this environment, we talked about how we're going to take a little bit smaller position size. We're going to take profits quicker. We're not going to aggressively buy pullbacks. We're going to wait for more confirmation. So we're not going to aggressively chase breakout. So these are all things that traders want to keep in mind during trading these price patterns during the market session. So we have 1 minute left. Now, this is the last chart I wanted to share with you guys for the day. This one will get you thinking a little bit. So as we're testing the 50 period moving average, and we're seeing a rally, a short-term rally in the equity markets, I want you guys to look under the surface of the market. So we're seeing a little bit of breadth improving, but I thought this was interesting today, just looking at since the market open, what our sector leaders and laggards are. So even though we're up more than almost 2.5%, we are still seeing a little bit of defensive rotation. Same with the relative leaders that we have been seeing. So I found that interesting. So that was the last chart of the day. I appreciate all of your guys' time here today, all of your questions, requests during the session. Thank you, Brett, so much for helping out. Please give us a follow on X. He is Brett Crowther CS. I am Rachel CS. Please smash that like button and subscribe to us on Trader Talks Schwab Coaching on YouTube. I will see you later, traders.